Hello, everyone, and welcome back to SALT Talks. My name is John Darcy. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series that we started in 2020 with leading investors, creators, and thinkers. And our goal on these SALT Talks is the same as our goal at our SALT Conference series, which we're resuming, by the way, in September of 2021 in New York. Willie, I don't know if you'll be able to make it flying in from Hong Kong, but we'd love to have you there. And that's to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And we're excited to bring you the latest in our series of SALT Talks on crypto, digital assets, and Bitcoin with the great Willy Woo. If you're in the crypto space at all and you don't follow Willy, I don't know what rock you're living under, basically. And if you don't follow crypto and you're looking to learn more about it, there's no one better to follow both his writings and his Twitter feed and everything he puts out than Willy Woo. Willy is an on-chain analyst, a new field that extracts market intelligence signals from Bitcoin's blockchain. He writes the Bitcoin Forecast, which is the most popular paid newsletter in the crypto industry. Again, I couldn't recommend that newsletter highly enough, and I think Brett, our host today, will echo that sentiment. Hosting today's talk is Brett Messing, who's the president and chief operating officer at Skybridge Capital, which is a global alternative investment firm. I would say Brett is sort of our crypto enthusiast in chief, and I would actually revise that to say our Bitcoin maximalist in chief. He's very much a Bitcoin guy, although a fan of everything that's going on in the ecosystem. And with that, I'll turn it over to Brett for the interview.
Thanks, John. Willie, thanks for joining us. I think we're going to have some fun today. It'll be educational. I'm going to tease part of our discussion with your anthem, right? And we'll explain this. We'll explain this later to our fans here. Before we hop into the fun stuff, can you explain? And I am a subscriber, and do echo John's suggestion that people should do likewise. Can you explain what on-chain analytics are? Because I think, again, for those of us that are traditional investors, these are just not tools that we had or we're not generally familiar with. So if you just provide a quick 101 and then we'll jump into the fun stuff.
Yeah, sure. Bitcoin is quite unique as in that it's got a public blockchain. So every transaction that we see is totally visible on that ledger. So there's this whole process where we can pull that data and analyze it and essentially get like demand and supply from different investors coming in and out of Bitcoin. And, it turns out there's a lot of signal in there. You can make forecasts and predictions. You can diagnose what's happening with the network at any time. Like recently, we just had a massive drop in the hash rate when there was a big power outage in China affecting miners. So you could see all sorts of, things that happen on the ledger and within the metrics of the network.
You mentioned the what happened in China with the mining going offline. I think the thing that people paid more attention to was we had a bit of a flash crash, if you will, this weekend, right, where we had about a 15% decline in half an hour. And as we tape today on April 22nd, we're trading at 54,000 or so, down from, a high of 63,000. Can you talk about sort of that decline, what you think triggered it? I'd be curious what your insights are.
Sure. We were trading in sort of the high range of 60 to 62,000. Like a few weeks ago, and it was trading at a near all-time high. And whenever we're at an all-time high, traders like to go long because there's no resistance overhead. And the whole market was very highly leveraged. There was more open interest contracts in the derivative markets than we've seen any time in this year. And so when you're in a situation where the market's highly levered, it's very emotional. And so what happened in China was there was a power sort of outage. The Chinese power companies were undergoing a safety inspection. And so it looked like the miners in China, which some estimates are between 25 and 40% of the mining power on the Bitcoin network is located in this particular area. These miners went offline, and they went offline at a very critical point because essentially the Bitcoin network balances, the amount of hash power these miners throw at the network with a difficulty adjustment. So this sort of keeps everything in check, so our block times keep being processed every 10 minutes. And so the difficulty just went up, and within something like 12 hours of that difficulty adjustment, the miners went offline in that part of China. So we had a reduction of compute power thrown at the network just at a time when we needed it adjusted for this higher amount of compute that is normally thrown at it. So immediately the network started to slow down. The amount of mining, the compute, was not sufficient to balance off the difficulty, and so block time started to slow down. And you can imagine if hash power starts to drop out of the network, and there's always been this correlation between hash power and price. We're in this highly levered zone, and speculators sold off, and so yeah, it was a sell-off that was quite unprecedented for this year, in that nearly 5 billion contracts got liquidated. 1 million accounts were liquidated across the whole ecosystem. If you were to include the entire crypto asset space, it was nearly $10 billion of liquidation. So we had a big flash crash.
So, I mean, if I can put that in layman's terms, is what we really have is, right, we have people who are levered, right, 20 to 100 to 1, right, and as the price starts falling, right, you have people that get sold out, and that puts pressure on the market, which then sells out more people, right, and then you get this sort of cascading effect. Is that really that's the dynamic you're describing, right?
Exactly. It's we call it a long squeeze. Either if you're trading on leverage, you're essentially buying assets with money you don't have, and so liquidation is essentially the bank foreclosing on you. So when that happens, your entire positions get sold, and that's dumped onto the market, and obviously that pushes the price down. And then it sort of cascades to the people below you with their risk limits set a little bit below, and it just creates this chain reaction, and the whole thing starts collapsing until everyone's liquidated, and then the price bounces back up. So we do a weekly Bitcoin show because there's just so much news in Bitcoin. And one of the things someone asked yesterday was, how is the market different today than it was in 2018? And the answer I gave, which I'd be curious to your reaction and tie it back to this, is in 2018, it seemed like everyone was speculating. People, right, were buying Bitcoin to sell it at another price to make money to go buy stuff with, right? This sort of idea of hodling or being like an investor, I think really hadn't taken hold. And I can tell you, as an institutional investor, we own, $600 million or so of Bitcoin. We're investors, right? We haven't sold any Bitcoin, right? We deal with the ups and downs. But it does seem that there's still and I don't know what percentage of the market, right, is composed of speculators, right? And price action tends to be driven by the marginal buyer or seller. I guess I just like your reaction to the market composition today versus what it used to be. And, again, is it speculators that are driving the market, or is it this institutional adoption that we're seeing? Yeah, the market's completely different from 2018. 2018 was a bear market, right? So that's
I'm sorry. So 2017. I mean, when I say that.
2017 was, Bitcoin had a lot of exchange activity, but very little of it was levered. We didn't have well-developed futures markets. The leverage you could get was on margin, so borrowing rather than derivatives, and so the price was more, well, less. Yeah, I would say it's less levered. But I'd say also right now, we've got this very large dominant derivatives market, like I'm just looking here. The normally derivatives market was much higher than spot, sometimes 5 to 10 times higher. We've just flushed out a lot of the derivative traders. So even now, post that flush, the derivative volume is 50% higher than what we're seeing on spot volume. I would say, you would say you might think that the derivative market has a lot of price control over Bitcoin, but actually that's not entirely true. It has a very short-term dominance, because if you're going to buy Bitcoin on margin, or you're there for whatever you buy, you're going to have to sell out sooner or later, because it's a short-term trade. And so ultimately, what's really important in this market is the long-term investors who are coming in to buy and hold. Whether they're coming in to buy and accumulate, or whether they're selling, ultimately, when we're looking into the weeks and months ahead, that's going to determine the price of Bitcoin. Essentially, the demand and supply that's dominated by the long-term investors. And this is what we're looking at on-chain. We can't actually see what's happening so much in terms of the trade positions on-chain. We can't see any of that. You have to look at data coming off the exchanges. But whatever happens in the short term, even if traders are shorting, and when you see long-term investors coming in to buy and accumulate, you'll know that it's going to be the traders that are going to get wrecked. They cannot continue to short and sell off into this demand that's coming from long-term investors.
So you raise an interesting point. There's a lot of discussion that the influx of institutional capital is going to reduce the volatility of Bitcoin. I actually don't happen to share that view, which seems to be consensus. And I hadn't really thought about what you just said, which is that we have much more leverage in the system today than we did in 17. So that makes me feel more strongly that, we're a ways away before Bitcoin becomes a less volatile asset. What's your view on that?
Yeah, I've run a projection on volatility. I've got the volatility of Bitcoin since the markets first opened in 2009. And if you plot that on a logarithmic scale, where originally the volatility was over 100% over a 60-day period, it is coming down. It is coming down. It's a decay. There's kind of like a half-life of decay, and most people will not notice it because they're only looking in the last few months or the last year. But if you plot this over the long-term scale, we're looking, I can't remember offhand, I think it's about in a decade, give it another dozen years. It's actually on track to cross under the peak volatility of USD Euro, which is quite surprising. But that's what happens when you map this over the long term. This asset class is still very, very much in its infancy. It's taken us 12 years to get to somewhere between 2 and 2.5% of the world population having exposure to it. We've just broken $1 trillion of capitalization. It's set to get a lot bigger. And as we get that kind of scale into the system and that kind of capital, it will reduce in volatility. And we have seen that for 12 years.
Yeah, I guess when I say the volatility not being reduced. I'm speaking more in a noticeable way in the next 1 to 3 years. I definitely agree with,
Okay.
if you scope out the time to a decade, I certainly agree.
Well, I'd say I've been seeing the volatility over the last, say, 3 years reduce as well. Now, the reason for that is that I think very strongly, like in 2018, we had very high volatility because all of the leverage was essentially one exchange that was unregulated called BitMEX. And there was a lot of if you've been trading that market, you could see a lot of, maybe you call it trader games, where, these stop positions, the defensive lines where people would exit their positions, they were being hunted through essentially, you could either call it manipulation or you could call it game theoretic trading, where you're pushing the price in a particular direction to take out traders. That was very evident. I used to say the short-term price action of Bitcoin was essentially a random walk to liquidate the most traders on BitMEX. And obviously in that kind of era, you would see this ridiculous amount of volatility where you have these wicks of price going, up, whatever it was, hundreds of dollars in minutes, and then it would revert back down as traders were being liquidated. And the price action was it's like a square wave, like these bats that would go up, down, and very choppy. And now we're in this era where, you've got like 20 derivative exchanges, and most of them are playing very nicely. BitMEX, now a very much minority of it. You've got the CME, which is wholly regulated. And so there's less volatility just in the sheer mechanics of the industry, the infrastructure there for trading these derivatives. And then when you add to that this kind of 2021 year, tail end of 2020, where we've had very, very large spot demand coming in from institutions, it's limiting the downside sell-off from what you'd normally expect from derivatives. So I keep in mind this kind of idea where you've got an organic price of Bitcoin supported by spot investors, and that can be modeled using on-chain data, and you can model that quite closely, and then you can measure the actual price of Bitcoin, which is really determined in part by the speculators. And so you got the speculative premium that happens. And whenever the price gets close to that floor price, that organic price, it's very difficult to squeeze the price below that valuation. The only time I've seen that happen was in the early part of last year when we had the COVID event where all markets sold off, and it did momentarily drop below that for a few weeks until all of the deleveraging had completed. I think the volatility is dropping, and it's just from the sheer amount of demand coming in from institutions currently.
Yeah, I think we have an ETF application before the SEC, so I'm sort of conversant in some of the terms that are important to them. I think they would use a less polite word and say that the market was subject to manipulation years ago, and of course we're arguing that with the maturation of the market, that it's just not as susceptible to it as it was when it was. I concur. We're still a very young asset class, but it's grown up a lot over the last 4 or 5 years. Can you speak to sort of the state of the market today, and maybe you can tie in why I opened our session with a 1987 song by Rick Astley, and maybe tie that to what your forecast is, which I think our listeners would enjoy hearing.
Yeah, it's we're seeing currently an unprecedented supply shock. So normally you see this kind of depletion in inventory on spot exchanges as essentially like the long-term buyers come in and accumulate and move those coins into cold storage. And this kind of buyer is kind of the smart money buyer that buys in early before, the price starts rocketing. When you take a lot of the supply out of the market, it does rocket up. And that happened in 2017 in the sort of $1,000 to $2,500 band before we rocketed up to 20,000 in the following 3 quarters of 2017. And, that depletion of the smart money coming in, that lasted no more than 5 months. And like this time we're at, what is it? I don't know. Is it 13 months already? It's just so much coins are being scooped off the exchanges. And, I work with Glassnode who do a lot of the on-chain metrics, and they've got a metric where we look at the wallets on the exchanges. Wallets on the network, and we cluster them and we figure out essentially who are the different participants. And we look at them and we go, is this person a highly liquid person who seems to buy and sell? And then we have what I call the Rick Assleys of this world who buy their Bitcoins and will never let it down. They just keep buying and buying without much history of selling. And very similar to that supply shock we're seeing of coins moving off the exchanges, we're seeing these Rick Astley genre of accumulators, of investors that are buying and holding. They're coming in very strong. So we're seeing a net flow of coins from participants that have been traditionally more or less speculating or buying over the short term and then selling. Maybe they are like traders that trade in and out of altcoins. But essentially these new people, the Rick Astleys are coming in and they're just buying and locking up the coins. And so that's been a very big driver of this bull market, that there's been strong buying. And even like we can measure the size of the purchases and the movement of that capital. And, a lot of the conversation has been about institutional investors. That's true, but also I'm thinking that there's a lot of high net worth investors coming in here, coming to buy in, slugs of $1 million at a time. And we saw that very strong in the sort of first 2 months of 2021. So yeah, I think it's these guys, the institutions, the high net worth guys that are coming in and scooping that up. They tend to store into cold storage wallets, which are very visible on chain. Whereas retail, which they're just starting to come in the last 2 to 3 weeks. A lot of retail numbers are going up. Retail tends to store their coins on exchanges like the Coinbases of this world. And that's less visible on the blockchain, obviously, because they don't take it off the exchanges. But we are seeing a lot of numbers climb lately with more retail type investors.
So you recently raised your price target from 250 to 300. I guess, can you put a time frame on that? And can you talk about how you get to that, how you derive that, and what drives that?
Yeah, it's a very kind of dynamic model in that it uses what we call mean reversion, essentially a moving average, an all-time moving average of the price of Bitcoin. And if you do that, it's hit every single top that Bitcoin's experienced in its 12-year history. And it follows a particular trajectory, and to get a target, you kind of have to get an idea of where the top will be when it will hit that. that line, essentially the all-time moving average across a multiplier. That model is looking like it is shooting for 300 to 400, even higher. It just really depends how the price action of Bitcoin acts over the next half of the year. But typically, in all past cycles, we've seen Bitcoin top out around the December, at least the fourth quarter of the year after the halvening. And, like Bitcoin is like this asset that's very, very much locked into an algorithm where every 4 years we have a halvening, where the inflation rate of the new coins minted into the supply gets halved. And that creates this reduction in sale pressure by 1/2. And so essentially that gives us a little shove on the price. If you've got half the amount of sell power from new coins being mined, you get a bullish impulse. And in all the past cycles, it seems that bullish impulse manifests into this crazy run up. The last one was 2017, took us from $1,000 to $20,000. It tends to peter out around the fourth quarter, around December. So ballparking December, that top cap model of mine, it could be anywhere in the 300,000 to 400,000 range. It might even go higher, but we need to see how it performs over the next 6 months.
I want to dive into this, Willy, because I'm going to challenge you a little bit here.
Sure.
So, and I'm wearing a Bitcoin hat, so just remember I'm super bullish as I challenge you. But it seems to me whenever I've seen a great trade that's so obvious, they eventually go away. So, just as an example, last summer we looked very hard at the grayscale arbitrage, which was a fantastic trade, and we passed on it, which is probably a little bit of luck, but it just seemed too obvious. Felt like everyone was doing it. And whenever I've seen that, it just means that you're sort of late in the cycle for that sort of trade. The obvious trade in Bitcoin that everyone seems to have is, well, this cycle is going to be like the last. Like, when are you going to sell? What is it going to be? December? Is it October? And my experience tells me that this cycle is going to be different one way or the other. Like, maybe we've topped. Maybe we'll top in July. Or maybe we're going to just blow through December and just keep going higher and higher. And this cycle, from a time and price standpoint, will look, I think that the cycle, if I were to put odds on it, the likelihood that this cycle looks like the past one, I would have very, very low. And obviously, I would skew to a longer bull market with higher prices because I'm wearing a Bitcoin hat. But I actually would think a shorter bull market, to me, is more likely than just a repeat of history. I just would like your reaction to that, because it's just there's so much discussion about, where are we? Ari Paul talks about, well, we're in the fifth inning, and he's basing it on prior history. And if everyone's got the same trade on, it's going to be different than that.
I kind of agree with you, actually. I've seen a lot of templating of this cycle to past cycles. I don't think anyone would have guessed that this cycle would be ripping up so quickly, so hard. And I know a lot of the technical traders have been like, this is overbought, and it's just been on the red line consistently until the last, I guess month and a half. And my approach really is like, we got all these models. For starters, if you're trading the model, I remember 2017, we hit like $10,000 and everyone said, this is the top. And I look at the back trace and I look at the on-chain analysis of it, and it could have been a top. It was touch and go. And then it ripped and doubled. It doubled to 20,000 in a matter of weeks. And so everyone's got this plan, beautiful plan, until the thing happens. And, I get people asking me, can you let me know when we get within 25% of the top? And I think back to 2017, I go, you know what? Well, didn't we just like we doubled in I think just barely over 2 weeks. In 2 weeks, we went essentially from 10,000. I don't have the chart in front of me. I should, but like it was something like we went from 10,000 to 20,000 in 2 weeks, and every day the price is running up thousands of dollars, and you think, can I have a nice warning 25% of the way to the top? And the whole thing is mayhem. And so when you're in that mania phase of the market, anything can happen. The fundamentals have gone out the window, and it's just highly speculative. You'll see the price rise way above what on-chain valuations will give it. And you just don't know. It's like you're playing chicken with the freight train of speculative FOMO. So I think that's going to come into it, and we're all going to, maybe the models work, maybe they don't. But everyone's going to be in complete disarray when we approach the top. That's always happened in Bitcoin. I don't know if we're going to top out early. I think there's a fair chance. There's a fair chance we might just looking at some of the rates of climb. I look at the capital coming into the network, and I look at these bounds you can put on it based on the backtrace. It's like, well, the price can't go beyond this part of this price target because historically, we haven't been able to break that with this amount of capital in the system. So there are bounds, if you project them forward, it seems like we're going to close out this cycle earlier. But having said that, fundamentally, looking at the institutions coming in, which maybe you have a better idea of, it looks like a lot of money is still coming in, and it's kind of. Yeah, I do get the sense that if that money is coming in and it's coming in near the later end of this year, it could change a lot. And the top model I have, it's a moving target based on essentially the price action that's happening throughout the year. So having said there's this target out there, and it's a very broad, generic target, it's very dependent on the time signature of that happening around December. So for anyone who's trading this and thinking, 300,000, that's a hard and fast target, it changes. I said 300,000 near January of this year because that was where, and that was conservative because it was based on past curving of that model. But I think it's very subject to change. It's certainly not like Plan B's stock to flow model where he's got a line in the sand where this amount of scarcity models this price and this valuation.
And by the way, I don't mean, my approach to models is it's sort of like, it's like riding a horse, you ride it till it bucks you, you know what I mean? So, I'm just wondering if this is the year we break the model. In fact, John and I spoke with someone who runs one of the larger institutional businesses in Bitcoin, and he believes that will happen for the reason you just said. He just said that the march of institutional capital is so large, and that it takes these folks time. It just takes them time. And, if they're going through their committees now and they're coming in the fall, like they're not worried about the cycle, right? They're not going to be saying, well, it's late in the cycle, let's not invest. They're going to be buying. And that's where you could get, sort of a busted cycle. I'm not on board with Dan Held's super cycle. I do think we're going to have a bear market. I think that's just nature of everything I've ever traded. But I just think it's going to be different this time. But who knows? We'll find out.
Yeah, I agree. I think the whole thing's on it's I feel like it's like it could go either way. We could if we get an influx of this very large capital from the very large institutions, that could change everything. But then also there's so much leverage in the system in this cycle. And we haven't seen that in 2017. Just the amount of people I've heard that are mortgaging their houses to buy more Bitcoin, or collateralizing their Bitcoin on a BlockFi loan to get fiat to buy more Bitcoin. Even funds are doing that. So, once the price starts to teeter, I could see a very large sell-off and a large deleveraging event that throws us into a bear market. But if this capital comes in near the tail end of this year, that's going to stop that from happening, and it'll just run up higher because that deleveraging won't happen.
Right.
So I don't know.
So there's one factor that I don't hear people talking about, which I think about a lot, which is, as we know, there are 900 new Bitcoin mined every day, right? So in the fall, let's say when the Bitcoin price was 15,000, that represented $13.5 million a day. And, PayPal and Square and Grayscale were able to scoop up that much just based on their daily inflows in buying. Today we're up to $49.5 million, right? And, look, we have a fund, we're buying Bitcoin every day. There are other people, right? So, that's an absorbable amount. But when you get to bigger numbers, right, it's 90 million at 100,000. I mean, this is just basic math, but when you say the numbers, right, you get to 250,000 Bitcoin, right? That's 225 million supply. And, I love Michael Saylor's idea of Bitcoin miners holding the Bitcoin on balance sheet, but most of them, don't have access to the capital markets yet. We don't have, as a percentage of the miners, a very small amount of them, right, are trading on public exchanges where they can raise debt and equity. So I think we have to assume that is supply that will come onto the market. That's just a lot of incremental demand just to sustain the price. I guess, what are your thoughts on that, and how does that affect your model, right? Again, we get to 250, right? That's $225 million. Then that new flows have to come in just to keep the price at 250,000. Am I thinking about that wrong?
Yeah, I really don't think the minor sell-off is anything that significant. A lot of people look at the charts of minor outflows into exchanges, and I look at them every day. I've got the whole chart every day. I'm looking at it, and I don't even look at it because it's so minuscule against the buying power of a full-blown bull market. We're seeing currently, at least on chain, it's 50,000 people are buying Bitcoin for the very first time. That means that by my estimates, multiplied by 3 roughly, we're seeing 150,000 people that are buying Bitcoin for the very first time at the exchanges, never mind just looking on chain. So, even excluding the institutions, just talking retail, it's less than a tenth of a Bitcoin per day. For each one of those new participants, it's very minuscule. Not very much talked about is the actual real sell power in this cycle is really the fees that are generated on these derivative exchanges. I was talking to one of the very large OTC desks. Their head was giving me an estimate of the sell-off by exchanges. You can think of it as a tax on trading, and then that gets dumped into the market, converted to fiat to pay salaries and whatnot. He estimated 1,200 Bitcoins per day in 2020 is being dumped onto the market. So you can think of that as a sell pressure. Another kind of miners sell pressure. It's like the exchange mining fees and dumping that on the market. We've got a lot more bullish activity, a lot more trading volume 2021. That's the one to look at.
Wait, so when you say that, just to be clear, so you're talking about like that, for example, a Binance is making their money in Bitcoin and they need to pay employees, so they're selling some amount of the Bitcoin that their revenues come in to pay employees. Is that what you're saying?
Yeah, as an example, I posted this last year. CZ mentioned that they pay their employees in BNB and they don't sell off to cash much. But we're talking a heck of a lot of volume, we're talking, easily $250 billion a day in derivatives volume most days. So you take a small fee of that, it's gonna pale. It's gonna make the miners fee tiny, absolutely tiny compared to what these exchanges are doing. And a lot of it does depend on whether they are stacking sats, essentially stacking those Bitcoins and holding it. Are they paying their staff in Bitcoin or are they selling to fiat? And so that's not analysis I've done. That comes from OTC Desk. I think to get a really good handle on it, you'd need to know exactly what the behavior of the exchanges are. But coming from an OTC desk, I think they've got a pretty good handle of exactly what's coming out and going to fiat.
That's interesting. I wasn't aware of that. I guess relatedly, so we've been in this sort of 50,000 channel now for 2 months or so, give or take. And there's a lot of talk of the institutional buying, right? There's been a lot of good news thrown at Bitcoin over the last 2 months, right? We had Brevin Howard, a big hedge fund, announced they bought. Dan Loeb, Ray Dalio just in the last week, right? Venmo opened up. And we're at 54,000, which again, we're up 90% for the year. But where's this outside of, the miners, which you're saying isn't substantial, and, let's say exchange fees to pay compensation, where is all the supply coming, right? Because there's a lot of talk about all the influx of demand, and how we're holding this $1 trillion level right here at 53,000. But I'm an equities guy. I traded equities for most of my career. It feels heavy to me. Bitcoin feels heavy to me. In equities trading, they say when a stock gets lots of good news and it stops going up on that good news, it's a good time to sell. And again, I'm ragingly bullish on Bitcoin, but for the last couple of weeks, that's how it's been acting. It's like a stock that gets hit with a lot of good news, but can't seem to break out. So just like your reaction to that in terms of who is selling based on your analysis.
Let me just zoom in. I want to pull up a chart so I can get my bearings on the dates here. So, typically, and you see it on the blockchain, you see the age of coins that are moving, the age of coins that are moving out of wallets. When you see coins moving out of wallets and they're moving to new participants, that's a sale. And so if we measure the age of those coins and the size of those coin movements, we've seen since the entire history of Bitcoin, the OGs, the whales that bought from early days, 2012 and earlier, when things were like under $100, those guys are divesting. And every single bull market rally, they divest a bit. And we saw that. Interesting.
I talked to a lot of those guys and they all deny it. So I believe your data and they're probably lying to me, but none of them say they're selling.
Yeah, well, maybe not recently. They certainly did. And, they certainly did up to March, and they stopped selling when Elon Musk started buying, which is very interesting. And then the sellers since then, and, they are whale sellers that have been selling since the OG stopped selling. The age of coins have been much younger, and we saw a lot of that heading into the tail end of March for the quarterly rebalance. So my guess is really the hedge funds that bought in the 10,000 band took a lot of profit. I think Ruffer was one of the funds that went on record.
So they sold half their position.
Yeah, so we're seeing, I think, a lot of these trading funds that are buying in for shorter term like positions, they're taking their 5 to 6x, and that's creating a bit of a cap in this zone here. So yeah, those are the sellers, is what I'm seeing very clearly based on the date of the coins that are moving into the exchanges.
Got it. I guess that makes sense. So something that's happened, I'd say, over the last 6 months that has surprised me is like the Dogecoin phenomena. You know, the ICO craze and the altcoin craze of 16, 17 felt, again, like, you know, the sort of speculation you see early in a market. And we had Bitcoin back to approaching, what, 80% or so of the overall cryptocurrency market in the fall. Bitcoin's now down to 50% of the cryptocurrency market, right? Dogecoin is 58 billion. And I'm only using that as a stand-in, right? There are a lot of other coins and DeFi tokens that, you know, are trading at really big numbers. I guess I'd like your thoughts on that in terms of the overall market, and what does it mean for Bitcoin, good, bad, or indifferent?
Well, you know, like the altcoin market, there's many ways we can look at it. Like the age-old way of looking at it is, look, these are alternative assets that you can trade in and out of. You do a backtrace on them, and I backtraced nearly 2,500 of them across all the history that there was, and more or less these assets trend down over multiple cycles. But the interesting thing about these assets is that they provide a you know, kind of beater. Like it in a bull market they can go a lot higher than Bitcoin and will outperform Bitcoin, and you know, bear market they'll underperform, and they go through oscillations. So a lot of traders will particularly the crypto native traders, will trade in and out of altcoins in different phases of the market, particularly when Bitcoin's in a sideways band. So while you've got the sell-off coming from initially the whales from the OGs, and now the hedge funds selling off in the quarterly rebalancing, it's trapped Bitcoin in a sideways band. And then when you're in that zone, you also get these native traders that are like crypto native traders that are like going, okay, this is my opportunity. While Bitcoin's going sideways, I'm not going to get any gains on that. So I'm going to move capital out of Bitcoin and into these altcoin assets. And they're tiny little market caps. So they go all the way up on very small amounts of capital. So you get that kind of effect. That's the traditional way of explaining it. That is definitely happening. We're in a kind of a 2021 phase of the market where there's a lot of experimentation happening on DeFi. And so, you know, there's a lot of legitimate experimentation, a lot of complete scams, but there's some very well-engineered DeFi projects that are well-engineered in their tokenomics to go upwards. It's attracting a lot of capital. And then you've got a lot of interesting projects that actually we didn't have in 2017 that look like, you know, they can hold the future of DeFi. Like, you know, for example, FTX is a shining star of one of these derivative markets, and they've been creating Serum DEX, and they've built that on Solana. And, you know, we've got exchanges there we can trade on now where the transaction fees are sub 1 penny. And all secured on a private key with no counterparty risk, or less counterparty risk, maybe a little bit more risk on that technology stack, But who doesn't want to trade without counterparty risk? These are very exciting projects. And if you were to think about how that looks like in the traditional world, the amount of capital in these derivative markets is huge. So these projects are really wanting to get a slice of essentially the future of finance, taking a lot of TradFi and moving on to DeFi. That's a big market right there. And so there's a lot of speculative fervor between even investors as much as traders that are like taking a ride on some of these more scalable next generation platforms. So I think that's it's a little bit more mature than the 2017 when we had no technology. You could raise money on a white paper and a whim and a good story. Now we're seeing some interesting technologies that may be able to carry some of the world's finance maybe in 4 years once it matures, once we get the bugs out of it. And a lot of people want to get in on the ground floor of that stuff,
Right. It seems though very early in terms of the real use cases for these DeFi tokens. You know what I mean? In terms of, there being long-term sustainable business models. I haven't seen many that have them yet, or at least in operation. But I do agree. It's super exciting. John, since you're dressed like a Bitcoiner, do you want to bring us home?
Absolutely. I have a few just big picture questions I'd love to hear your answer to, Willy. And one is the price of Bitcoin in 2030. What do you think it will be? And what will Bitcoin's role in the global financial system be? Is it going to become the default global store of value around which every other fiat currency and digital currency and the global economy revolves around? What are your thoughts on those two questions?
I approach Bitcoin as a technologist, and I do track the growth rate. I've been on record from the data I'm seeing that in the next 4 to 5 years, 2025, we'll have 1 billion people with exposure to a digital asset, being Bitcoin or any other one. So what I'm seeing is essentially software eating the world. Now that we've figured out how to do scarcity on the internet, which we never been able to do before, software is eating the finance world. And so I can see in 10 years, that's plenty time to take big chunks, maybe even majority chunks out of traditional finance and putting that onto blockchains, Bitcoin being the leading store of value. We're like, we're in this kind of transition into a digital age. I'm seeing that like crypto assets is going to eat everything. Eventually, is 10 years enough to do that? Maybe. Bitcoin itself, I think it's going to eat gold in that time. I think it's going to eat some of the store of value in equities, which is like, what is it, 100 trillion? I think that conservatively we're going to be in the 10 to $50 trillion market cap in 10 years time. So whatever that works out as.
Right. So that's 10 to 50x from here. So we'll let our viewers do the math there, but not a terrible return. Do you think Bitcoin and cryptocurrency in general, you're talking about software eating the world, so I think I might know your answer to this question. Do you think it poses a legitimate threat to US dollar hegemony? The idea that the US dollar is going to maintain its role as the dominant asset through which the United States government can pull all kinds of different levers related to sanctions and its other geopolitical goals?
Oh, that's a tough one. You're probably asking the wrong person. I don't actually think that Bitcoin's going to be completely dominant. I think that the future is a basket. I think the US dollar is going to be more or less digitized. And, in terms of like, the US is very, very much a large economy. I don't think that's going away. So there is such a thing as, a nation state currency backed by a very large economy with a big defense force. So I don't think that's going away. But I do think that the future of money will be backed by a basket of assets, and I do think Bitcoin will be a major part of that. And so I don't know if that answers the question. I don't think I'm not a maximalist. I don't think that Bitcoin's going to be the money for the future and the only money that's going to swallow everything. I think it's going to be a lot more nuanced and more complex.
Right.
So, yeah.
You're sitting in Hong Kong right now. China's relationship with Bitcoin has been interesting and mixed over the years, where you have a lot of global Bitcoin mining takes place in China, but 4 years ago, they banned the transfer and issuance of cryptocurrency. But in the last week or so, the deputy at the People's Bank of China, the central bank of China, came out and said Bitcoin is not a cryptocurrency in his eyes. And obviously he speaks on behalf of the government. People don't speak out of turn in China. But he thinks it could be an investment alternative. And that marks a significant shift in tone from the Chinese government. Obviously, if China were to open things up relating to Bitcoin, that opens up a massive market of buyers for Bitcoin and Metcalfe's law and the derivative network impacts of that. Do you think China is on its way to liberalizing the way it looks at Bitcoin?
Oh, I don't know. There's one thing I do not know at all. I do not know how to read China. I don't know what their strategy is, whether or not they want their people to have exposure to this asset. It does make sense that they would. I think there was a paper put out by someone in Chinese inside China that had weight. I can't remember. It was many years ago. That did say it made sense for their citizens to have exposure to this if it got big. It seems like a good move, but I'm not an expert of China, inside China. So again, I don't think I have any kind of smart thing to say about that.
All right. Well, we know Willy, he specializes in on-chain analysis. Anything related to the data on the chain is where Willy really specializes. So look forward to continuing to reading your analysis on your newsletter. Please tell us again about your newsletter, where people can subscribe to it and find it.
Okay, so the newsletter is I take a read of the blockchain. I look at demand supply, essentially looking at what's happening and what it's projected to happen. So you can make kind of forecasts of mid-macro directionality. And so if you want to subscribe to that, best way to look it up is to go to my Twitter profile, Woonomic on Twitter, and there's a link on my profile page to the newsletter. You can subscribe from there.
All right. Woonomic on Twitter. You can go find Willy Woo, his Substack newsletter, which is fantastic. Again, we'll share a link to it when we send this episode out to all of our community at SALT. So thanks so much for joining us, Willy. Brett, you have a final word for Willy before we let him go?
No, just again, I'm a fan. This was really fun. Thanks for joining us, Willy. I really appreciate it.
Okay. Thanks, guys. Enjoyed it too.
And thank you, everybody, for tuning in to today's SALT Talk with Willy Woo. Just a reminder, if you missed any part of this talk or any of our previous SALT Talks, you can access them on our website at salt.org/talks or on our YouTube channel, which is called SaltTube. We're also on social media. Twitter is where we're most active at SALT Conference, but we're also on LinkedIn, Instagram, and Facebook. And please, if you don't mind, spread the word about these SALT Talks, particularly if you have an uncle who rails on the fact that Bitcoin is some type of imaginary currency with no utility or value. Send them to Willy Woo's newsletter, his Substack, as well as have them watch this episode. And I think it'll go a long way towards helping to change their mind. But on behalf of Brett and the entire SALT team, this is John Darcy signing off from SALT Talks for today. We hope to see you back here again soon.